Okay, Dan Fitzpatrick here, stockmarketmentor.com, and let's do the old Fitz and Five thing here. So home builders are working really well. They've been this way. They've been running for a while, but this thing, the XHB and also the Dow Jones U.S. Home Building Index or Construction Index has kind of done the same thing, and that is hit new highs. Last time this was up even close to this level was back here in late 2021. Then we got this big dip here. And if you really want to look at this, you have to be creative and squint your eyes a little bit. But yeah, I would look at this and say this is a big old cup. And like I said, you got to squint here and use your imagination. And I'm asking for some leeway here. And then this is a handle. And then we get a breakout right here around 80. And now we're looking for that kind of move to the upside. So, and that's on a weekly chart, right? So the bottom line is this. If you're looking at that pattern, you can't just put a stop just a little bit below there. Volatility will kill you on that. But what you could do is look back here and say, okay, well, I see this gap in the XHB, the low 79.76. So maybe I'll look, I just got it 79.20 or so because I'm lazy. And I could look at this and say, well, I don't want to buy it today because by the way this thing traded, it's probably going down tomorrow. So I'll wait to see how far the stock falls. Hopefully it'll fall enough to give me a better entry, but like let's say it falls just to the 8-day EMA or maybe even a little bit below. It shouldn't matter with respect to where you put your stop. You'd put your stop based on the top of this gap here and say, okay, as long as the stock holds $80, I'm good. And so the further down this thing goes, as long as it's not just a complete breakdown where it's a big wide-ranging downdraft on massive volume, which I don't think is going to happen. I don't know how it would right now. But the further this falls and gets closer to, we'll say, 83, which would really have been the last entry, last good entry. If the stock were to fall back here and give you an entry right around 83, now you're taking a risk of less than 5%, about 4.5% in buying if the stock comes back down here. So anyway, that's what I would look at in the home building ETF with KBH. Used to be Kaufman and Broad, now it's just KB Home. You get kind of a similar situation here. The stock did break out above this high once again, just like the other. It looks like it's kind of a one-day reversal, maybe a little bit of a climax high here. So this is another one. Again, the pattern's kind of similar, but there's a lot of differences as well. But if the stock pulls back down kind of into this cluster here where it has obviously traded before, it kind of puts you right in the mix so that you're not buying on a breakout that ultimately fails, because a lot of breakouts have been getting knocked down. Most of them have been. So this is the way you got to look at it. You got to say, hey, the stock broke out. Okay, what is that? That's a sign of strength. That's a sign of aggressive buying. Otherwise, you're not going to get a stock breaking out. So bam, that sign is there. That dynamic has been identified. And then when you get a pullback, if the breakout kind of fails, then what that tells you is, okay, there's also some supply in there too, but it doesn't negate the presence of buying interest. It just means that there wasn't enough relative to the supply to keep the stock going. So the stock gets knocked down, and listen to me, I'm giving you pearls here. The stock gets knocked down, and what does it get knocked down by? That supply. Okay, well, once the supply has been absorbed, then that supply is gone. And so then it's just kind of a battle between excess demand that still wants the stock and is happy to get it at a lower level versus excess supply, which is, okay, well, I didn't sell it the last time, but if I get any more demand, I'll sell it then. And so this is the push and pull that makes stock charts look like stock charts. And if there wasn't that push and pull, then the market would not exist. You have to have buyers and sellers willing to pay different prices for things that where they ultimately, though, through the negotiation of microseconds, they come to some kind of a compromise. So if you can kind of think about any price chart as literally a negotiation, as well as maybe a tug of war if you want to go, hell, I got analogies up the wazoo for the market, but let's just go with those. If that's how you want to look at this stuff, then these charts are going to make more sense to you. So anyway, that's all I got for you. So I hope this does make sense to you, and I hope you're patient in waiting for a better opportunity to get into my homies. Okay? I'll see you next time.